Welcome to REI Accounting Talk, the podcast where we simplify bookkeeping for real estate investors. If managing your books feels overwhelming, you're in the right place. I'm Sarah Bratcher, a CPA dedicated to helping you make sense of your finances so you can focus on growing your portfolio. Each episode, we tackle accounting challenges, share practical tips, and help you build a solid financial foundation for success. Let's turn your accounting stress into confidence, one episode at a time. Today, I would like to welcome Cheryl Heller. She is the driving force behind Pillar One Consulting, offering tailored fractional CFO and strategic advisory services to empower small businesses and startups. She is also co-founder in the Strategic Board Collective, a partner in a private equity firm and real estate investor with a focus on short to midterm rentals. Welcome, Cheryl.
Sarah, thank you so much. It's great to be here.
I'm excited for our chat today. Um, but first, let's start out with your story. Tell us a little bit about, your real estate investing journey and your portfolio and how long you've been at it.
Yeah, so I sort of always thought I would get into real estate investing and did sort of one or two small transactions that didn't really make any money, were sort of break even, and took a lot of time and effort. And I was like, there's got to be, a better, easier way to do this. And so probably around 2017, 2018, I really started doing more research and found a lot of, influencers that were talking about real estate and kind of dug into that whole world. And I, was convinced that we could do better than break even. So ended up selling the property that I had at that point and rolled it into several additional properties. So now we have two short-term rentals on the beach, one that's an urban location that's a duplex short-term rental, and another midterm rental in an urban location as well. And so we actively manage those. We do use some property managers to help us with the short-term rentals. And we're looking to continue to grow our portfolio. I love the short-term rental at the beach because it's, the beach is favorite place of mine. So I love to be able to go there when it's not being used. But really sort of now looking at pivoting to more urban locations since, prices have risen and interest rates are up and I just want to keep growing the portfolio.
That's great. Tell us more about your career that kind of helps you get into real estate and support that everything. What You are a CPA and you're a
Mm-hmm.
fractional CFO for your company and everything. So just dive into that and tell us kind of your background in that area.
Okay, of course. So I have been working for myself for about 7 years now. I was worked in large companies, many of which you would recognize for probably a little over 20 years. Did the whole corporate thing, climbed the corporate ladder, and that's really what allowed me to start investing in real estate. Was able to make enough money to, save some to get into the real estate ventures. And then about 7 years ago, I left, just really needed that kind of detox period from big corporate jobs and decided I was going to go out on my own. And from that, I started getting calls from, friends and colleagues just asking if I had time to help them out with their startups or they might be at a different job working in a smaller company that didn't have the same infrastructure that we were used to. So could I come and help them set up that infrastructure? And so from there, my consulting firm started. So now I work with startups and small businesses and help them sort of set up their financial infrastructure, manage the financial infrastructure, really overall manage the business, looking at KPIs, looking at their growth over time, and how they should think about that from a finance perspective.
Awesome. I love it. And it speaks to my heart. I'm from industry. I am not a tax CPA as well. And that's exactly where I like to be and digging down into the financials and,
Mhm.
the backbones. And, you said you work with startups. So you're on the ground floor of getting things in place, uh, while they're still young and early, so they can, grow with that and everything. And that's kind of what I want to start here with our conversation about all this. And I want to talk specifically about budgeting for the smaller real estate investor getting into it and everything. And
Mhm.
just kind of what are your thoughts on why budgeting is essential for real estate investors and why they need that when they start out?
Yeah, I think budgeting is important whether you're real estate investing, whether you're starting a business, even in your personal life, because that's what helps you sort of create a plan for where you're going, and it helps you to make sure that you have the right support and resources behind you. So, for example, if you are looking to get into real estate investing and you want to buy property, let's stick with a single family because that's sort of the simplest basic way to look at it. So, if you're going to do, for example, short-term rental like I do, we still pay for the electricity, the water, the internet, all of those sorts of things at our houses so that our guests can come in and just have everything working for them, different than long-term rental where you typically as a landlord don't pay for those things. So what I do when I'm looking at a property, and this sort of goes for not only budgeting once you're in the property, but as you're thinking about, is that property a good deal to purchase? You need to assume what you're going to be paying each month for all of the expenses. People think about their mortgage, that's the most obvious one, but then all of these other expenses come up. You need to think about property taxes. You need to think about, if you're in a winter location, you have to think about snow plowing, all of those sorts of things. And so if you have a good schedule to start with, there's many things available on the internet for, as a baseline kind of what are the line items that you should see in your budget. And then you have to make some educated guesses. Think about, for that market, do some research on what electricity costs are, what snow plowing costs are. And then you can make sure that you're going to have enough cash to pay your bills for the whole year, especially when you're thinking about a midterm rental or short term rental. Your revenue may be seasonal, right? So you have to make sure that as you take in your money, for example, at the beach over the summer, we make most of our money over the summer, but we can't spend all that money because then we have to pay our bills, throughout the rest of the year where we're actually not bringing in money. And so that's why it's helpful to have a budget because you can sort of look out into the future and see, and make sure that you have all of your resources in place to continue to pay your bills.
I love it. Yeah, it creates, the expectation that will be there, and hopefully decreases the panic, and because the property taxes come due at the end of the
Hmm.
year and your annual insurance bill comes due. And so yeah. But I like how you talk about doing it, before you actually purchase it, like when you analyze it, because I mean
Hmm.
that is great for making sure that it is a good deal and you will make money when you buy it too. Yeah, I
Hmm.
love it.
Yeah, and
Um,
what's that quote? You make your money on the purchase, not on the sale.
mhm,
So
yeah,
really, like you have to do all that work up front and make sure you're getting a good deal because if you pay too much for a property, like you may never make it up on the back end.
yeah, you won't ever get that. And people go back and forth between cash flow and appreciation, and which is better and everything. But at the end of the day, you still need the cash flow to maintain it. So whether the
Hmm.
appreciation's there or not, and budgeting helps ensure that you will have that to maintain it
Yes.
and keep it up. Yes, awesome. Are there any special tools or software you recommend for budgeting, or what's kind of your idea on how to set up the foundation for all that?
So I know there are a ton of tools out there, but I'm pretty old school when it comes to that. I just really love Excel because I feel like I can manipulate it in the way I want to, and that it's very clear to me, where the numbers are coming from and where they're going to. And, there's a whole lot you can do in Excel if you start playing around with formulas. You can create graphs, you can, continue to modify it over time. And so I think if you were to look on my computer, the kind of document that I have the most is probably Excel because I will do Excel for everything. And it also helps too because then I can go back and look in history, like if I, properties that I bought many, many years ago, can I pull back the budget for those properties and use them, going forward, or use that structure for some of my analysis going forward.
Awesome. No, I love it. And I agree. I think it, some of the tools and software out there have so many bells and whistle that you can kind of get drown in it, and you have to, there's a learning curve to add it to it. And yeah, just simplifying with
Mm-hmm.
Excel is a great way to get started. And there's not much thought process. You have your rent coming in and you have your expenses coming out, and you can just
Mm-hmm.
list them out easily,
Yep.
and you're in control of it. So what advice would you give someone who's just starting budgeting and getting it set up and to maintain it moving forward? What's kind of
Mm-hmm.
like the advice you would give someone on that?
Yeah, so I think if you just kind of start from what you know, right? So whether you're budgeting for a business or you're budgeting for a real estate project, you know that there are going to be certain expenses, certain categories of expenses that you're going to need. So just make a simple spreadsheet. Where's your inflows and where's your outflows, and then you can start to see that over time, and then you can also populate it. So for example, if you have an investment property you've had for a couple of years, but haven't really done anything by way of budgeting, most bank accounts will let you download into Excel or a CSV file, which is similar to Excel. And I would say start by downloading, this year's data. So you get 12 months of data, download that, and you can create the formulas and start categorizing it so that you can put it into a inflows and outflows, profit and loss statement, so that you understand what happened this year. And then you can take that and build on that, make your assumptions as to what you think is going to happen next year. So I think really the first step in how to get started is just to take your data that you have, like whatever data is available to you, start by looking at that.
Oh, that's great. I love it. And so moving forward, they get a month or two in after looking at this budget. How often should they refer back to it and check in with the budget and update it and all that? What would be
Mm-hmm.
kind of your standard on that?
Yeah, so I'm looking at budgets at least once a month. And like the corollary to having a budget then is also your financial management software, right? And so you might want to use a software like QuickBooks, or I know there are other ones that real estate investors use, like Stessa, those sorts of things. But that will help you keep track of your spending on a regular basis. And you can do what's called a budget to actual report. So you can once you create your budget in QuickBooks, in Excel, then you can put it into a program like QuickBooks. And then you can create your budget to actual report. So every month you're looking and saying, okay, what did I expect to happen? And then what actually happened? And sometimes it's just timing, like, oh, I thought this bill was going to come in this month and it actually, didn't come in this month. So it'll come in next month. And other times it's, something happened that you didn't expect that you had to spend money on, that you then may have to adjust your budget going forward because you spent more money one month than you expected to. And so I think at a minimum, you should be looking at it monthly.
Good. Yeah. And I like that. I like incorporating it into where you actually have real data at that so you don't have to update a budget and update your accounting software for those purposes. No, that's great. Um, any other tips or insights on why budgeting is important for real estate investors? What's kind of the takeaway there?
Yeah, so I think the other thing that budgeting, particularly when you compare to actuals, you can start to see your trends, right? And you want to understand the trends over time. So if you're consistently under budgeting for something or consistently over budgeting for something, you will be able to see that and adjust. It also helps you if you have to, like, say you have to do a renovation or you have a big capital improvement project that you want to plan for. Having your budget will help you do those longer term planning activities, so that you can determine, can you renovate the kitchen this year or do you have to wait till next year? until you have the funds to renovate the kitchen or do a big landscaping project. And so really that it just helps you kind of manage the property better in general.
Yeah. No, absolutely. So that kind of flows into, I want to kind of move into talking about forecasting, because I hear a lot of people talk about, forecasting now, and it's like,
Mhm.
okay, well, how is that different and all that. So just kind of give us your take, the difference between like actual budgeting and forecasting. What's the difference in those two?
So they are very similar. And the way that I look at it is forecasting really is longer term. So you might do a 3-year forecast so that you can really understand, for example, those larger capital expenditures or the growth, which I think applies more towards a business or your real estate portfolio as a whole than a single property. But then your budget is really what you're working with this year. It's what you think are going to be the inflows and outflows this year, more immediate term. And so your budget is usually the next 12 months. And that's when you can track it against your actuals. The forecast might include, you might have a forecast that is your sort of fairway forecast. Then you have a best case scenario forecast. So different scenarios. Best case scenario, if everything happens, great. And then you might have a worst case scenario. So that helps you think through, if things don't go as well as you think they're going to, what are the changes you're going to make to help keep the business or your real estate project on track, right? So if you don't make as much money as you think, if your revenue is lower, then what expenses can you cut or pull back on in order to make your financials stay solid? So those are the kind of exercises that I think of when I think of forecasting.
Yeah, I love it, and it's your own little crystal ball into the future of
Mm-hmm.
what could happen. It's not going to be perfect, but yeah, no, it'll help avoid the pitfalls and the
Mm-hmm.
crazy things that can be thrown at us as real estate investors, because we've all had
Yeah.
some really unexpected expenses. Um, yeah. So, and then I want to kind of go into a bigger picture of strategic planning. A lot of people, there's a lot of noise out there of tax
Mm-hmm.
strategy and, especially tax strategy. I mean, you have strategic planning for, your business growth and all that as
Mm-hmm.
well. But I kind of want to, kind of go into that. My take is, your bookkeeping is the number one tax strategy you could ever do, because I mean, it makes no sense to me to hire a tax strategist if you don't have, your books somewhat kind of where they are and they can make decisions from there. What other ways do you see strategic planning used, and in using the forecast and the budget for that?
Mm-hmm. So I love that, to start with the bookkeeping for your tax planning and strategic planning, because if you are not starting with good data, then your sort of analysis and your projections and your strategy will be off the mark, because they're going off of a piece of data that isn't accurate. The other thing that I like to do is what's called a SWOT analysis. So SWOT stands for strengths, weaknesses, opportunities, and threats. And so when you talk about strengths and weaknesses, and you can do this for a single property, you could do it for your portfolio of properties, you could do it for a business. It's really looking at internally, what are the strengths of your property? So, for example, going back to a vacation short-term rental, do you have a pool? Do you have a hot tub? Are you close to amenities? All of those sorts of things. And then, or weaknesses of your property. Maybe, you don't have a pool when everybody else does. And then the opportunities and threats are the external factors. So, for example, an opportunity may be that something is happening in your local market that's going to bring a lot of people into town for vacations. Maybe there's, a big new attraction or something like that. And a threat might be some sort of risk that you're managing. So maybe your loan is going to reset because you have an adjustable loan and interest rates are going up. So that's sort of something external that you can't really do anything about. And so really understanding, the internal and external factors and what your strengths and weaknesses are and how you can address them, I think is super important. And it's a great framework from which to do your strategic planning, because then you can sort of make decisions on where you want to go next. You can assess any risks and decide if you're going to mitigate the risk, if you're going to do something to eliminate or reduce the risk, or if you're just going to accept it as a risk and kind of go forward knowing that it's there, but not really take any action.
Yeah. Oh, I love that. And that would be, as we're hitting the end of the year now and everybody's making goals and all this other stuff. I think
Mm-hmm.
that would be a great practice to analyze those four SWOT areas to see where your company needs to go, or
Mm-hmm.
each property needs to go in the next year. That's amazing advice. Another thing for me to do for my stuff too. Uh, it's hard to slow down and take my own advice sometime, but I'm gonna take your
I
advice
know.
on that one.
Well, I mean, I feel you there, because there's a lot of things that I advise my clients, and I'm like, oh yeah, I probably should do that too. But you spend so much time worrying about your clients that it's hard to find time to focus on your own business. But
I love
we should
I
be practicing
love
what we preach.
I know. I love that conversation because I tell that all the time. The cobbler's kid never
Hmm.
has shoes, right?
Right.
And it's like I feel that way too. I have had to hire my own business for my real estate portfolio because I just don't have time for it. I'm just like,
Hmm.
I've got other things going on and everything.
Yep.
Um, and I do like that we're having that this conversation has kind of gone in there, because people think that just because we're CPAs we're perfect, and our budgets are perfect and we never have any flaws in our financing and everything. And I think that's a huge myth, like, because we are human too, and
Hmm.
we have flaws in our budgets and we have everything going on. But yeah, so moving kind of into that, tell me more about your personal real estate portfolio. What do you use an accounting software for that? Do you use Excel for that, or do you use QBO? How does that look?
Yeah, I use QuickBooks for it, and we use the classes designation in QuickBooks. So we have each property is designated as a different class. So I can pull a report for a specific property, going back, for however long we've owned it, or I can just pull a current state report, like for the month of November, with all of the properties in different columns and then totaled at the end. So I think for that purpose, QuickBooks has been fairly flexible. And then if I do need to do any additional analysis, I just download it into an Excel file, and then I kind of take that existing data and can kind of play with it on from a forecasting perspective.
Yeah. I agree. I think QuickBooks just really has the reporting down, especially when you use the classes for real estate investors. They have a really good piece there, and it's still my go-to to refer everyone
Mm-hmm.
to, because they've just done such a good job at it. But I know there's a lot of property management software that people are moving to that have the accounting function, and some of
Mm-hmm.
them are getting better at it. So hopefully they can do that, so it's more of a one-stop shop. But still, QuickBooks is just, I mean, it is what it is.
Yeah.
They've got the advantage.
Well,
Somebody
and
will come out with something.
yeah, and I think, here's the thing, like, is there something else, that another software program that provides a certain feature that QuickBooks doesn't have, or that makes it easier? Maybe, but like, I'm just so used to QuickBooks. I use it not only for my real estate, but for my consulting business, and some of my clients use it. And so, I'm working on with QuickBooks on a variety of levels. And so I just know it well enough that it works for me, and I can figure out how to make it work. It doesn't mean it's going to be right for everybody, or that it's the best one out there,
Yeah.
but it's what's the saying about the devil, right?
Yeah, it's all in the familiarity of it. Yeah.
Hmm.
It's
Yeah.
what's comfortable. That's kind of where I'm at. I've had almost 20 years experience with QuickBooks now, so that's probably where my bias comes from as well. I've
Hmm.
I've tried to use the others for my personal, but I still just keep going back to QuickBooks. And I try
Yeah.
it out to kind of know when I'm helping my clients out too, but I still just gravitate back to QuickBooks, because
Yeah.
it's
Yeah.
just quicker, because I know.
It's easy.
Yeah.
Yeah, you can just move around very quickly, and yeah.
Yeah. Well, it was very good talking to you today, Cheryl. Let it tell us more about how we can find you. If if we have any more questions for you, can we email you or find you on social media?
Yeah, of course. I actually have a giveaway that I'd like to give your folks. It's called Demystifying Financial Jargon. So it's a list of 30 terms that can help you better understand what are some of those key finance terms that you might hear as you start to get into budgeting, as you work with your bookkeeper or your tax strategist. And so you can find that at www.30terms.com. And you can
Okay.
download it from there.
Yeah.
Yeah. And that'll lead you right to my website, and you can get in touch with me through there.
Awesome. Well, Cheryl, thank you so much for today. I appreciate sharing all your knowledge with us and helping us understand more about budgeting today.
Yeah, of course. This was
Thanks.
great. Thank you so much, Sarah.
Yes. And thank you to all my listeners for tuning into this episode of REI Accounting Talk. I hope you're feeling more confident about tackling your bookkeeping and managing your investments. If you found this helpful, don't forget to follow me on Instagram, REI Solutions with Sarah. See you next time. Thanks.